Hello everyone, how are you doing? Fourth Serif here, gonna go over today how much money I've made from selling covered calls. Sold on two stocks, Sunpower and Camping World. Now, these stocks are actually down a little bit from where I bought them at. My average cost was $350 and we're at $331 on Sunpower. So I'm down about 5%, which works out to about $200. Stocks go up and down, stuff happens in the short term. Now, you should always buy companies you believe in. Don't just buy them just to sell covered calls. Buy companies you believe in. If you only believe in companies that don't have cheap stock, like you don't believe in SunPower, you don't think it's a good investment for you, then don't buy it. If you only think, a company like Apple, save up, buy it slowly, keep adding, and get to those 100 shares eventually. Because it's better to have investments you believe in than to just rush into something saying, I'm going to get rich selling covered calls. You're not going to. It's just an extra way to make that extra bit of money to hedge your investment a little bit. You can see Camping World, I'm down a lot more. They had a really tough last month. They were doing pretty well, recovering their last 3 months. It's a little bit of a turbulent stock. But if you go back and you look at the last year, kind of has its ups and downs. Last 5 year, again, it's up over 5 years. It's doing okay, but it has its ups and its downs. And so you try and buy when you think it's low and keep adding. But even though if I were to sell today, I'd take a bit of a loss. That loss is a lot less because I've been selling covered calls. So even when stocks do bad, now, Robinhood's not factoring in any of the money I've made from covered calls in that return. That's just stock performance. So on one like SunPower, I'm still up even though the stock is down because I've sold more than $200 worth. So if we go to our history down here, you can see, hopefully on the web version, I think I can sort by... Okay, it doesn't let me sort by calls. The mobile version, you can sort by like dividends, calls, things like that, by contracts. So I don't get what the difference between orders is all of it. But let's go through. I'm going to grab my phone out. We're going to live calculate all of this because I don't want to do it later in post because I will forget and just upload the video. So we're just going to go through right now. So you see I have a limit sell price just in case the stock shoots up. So I have 1,200 shares. I'm only selling calls on 1,000 of those shares because occasionally the stock just skyrockets out of nowhere and then drops down immediately. So should that happen, I want to just lower my cost basis a little bit. The lower you can get your cost basis, the more you're going to make doing this because you always want to sell in the money. Do not sell out of the money. Some people will tell you to do that because you can make more. It's super risky. It's not worth it. You can make a great return selling in the money. So you can see I sold, this was earlier today because the stock did really good. I sold 3 at 27. So this is $27 that I'm getting, essentially, right? A little less because it's some fees, but we're not going to factor that in because it's pretty negligible, and then it's just too much math. Sold another 7 at 28. These are different expiration dates, different prices, all that sort of stuff. So we got 81, 196. So already just today, I covered any loss. I could, once these contracts expire, if the price of the stock is the same, I could still sell it all and have made money. Obviously not going to do that. Going to keep making money off it. Now you can see a lot of times I buy these back at 5 cents. Anything less than that, Robinhood, you can't buy it at 1 cent. It's only in 5-cent increments. It's really annoying. I hate that about Robinhood. I wish they would fix it. But if I can buy a contract back at 5 cents and end it out early and not risk my stock anymore, I always do that because that $5 is pretty negligible when I'm selling them for you can see here, my last sell before that, $500. So I'm losing $5 on each one. It's not a big deal. It's much better to have your stock be safe. Because you never know with some of these, like it could, the day it shoots up like crazy, could be the Friday of expiration, and all of a sudden you're out your shares. Better to just know, because I want to hold them for years and years and years. So this one was 515. Another time, it had really shot up. It was really doing well. I've only owned these since the beginning of the years when I started buying in. Really, I haven't owned them that long. I've been slowly but surely adding, and it has been a great investment because I've made a lot of money. Another 260 on contracts there. Let's see. Some more calls here. Oh, those ones are canceled. Okay. I really wish I could sort by. Bought some more shares. Been doing a lot. See a lot of buying in here. Bought in increments, trying to get my cost basis as low as I possibly can. Shout out to the people who bought this stock when it was like under $2 for a while. 2 more contracts I sold here. You'll see a lot of these now. It's a lot lower dollar amounts because I had way less shares, so I didn't have the full 1,200 this whole time. But still, another $86 for 2 contracts. Not too bad. Sold another for 102. A lot of times I'm just hoping the stock goes up a bit to a price where I'm happy to sell the calls at. Doesn't always happen. Another couple for $54. I have also bought some calls a few times when I think the stock's been really undervalued. Another $13 for this call. Sometimes they're less expensive. The stock's down. Up to you whether you want to sell. I've kind of switched. I started, trying to get more than maybe just $13, but I really wanted to make sure I wasn't losing my shares at this point. This was still kind of getting used to it. But, those had very low chance of executing. So I felt really comfortable selling and just collecting that little amount. I was also in the money. That was a $4 call, and it was fairly close to $4. I think we were above $3.50 at that point. And so when I'm in the money, I feel like I need to get less out of each contract. See, we go back, and I was selling $5 calls, got $85 for that. Sold another call back here. This was up at $6. So the stock has fallen quite a bit. I've dollar costed, averaged in to get my cost basis a lot lower, and I'm making money on selling calls the whole way down. This has helped me buy a lot of these shares, and you can see when we go over it at the end here, we're getting pretty close, I think. Another $24 there. How much money I've actually been able to make. So this is end of last year. I believe I only had about 100 shares. Yeah. So I got my first here, sold my first here for $13. So in total, I've made just under $1,500, about $1,400 off of this. And if I go back here, I don't even think it'll let me just go straight back to Sunpower. Okay, cool. I mean, market value, $3,900. I've made $1,400. It hasn't even been a year. $1,400 off a less than $4,000 investment. That buys you a lot more stock. That buys you a lot of money. If you want to not put it into this, you want to put it into the S&P 500, put your money in something safe. That's smart too. Or if you want to do it so you can keep selling more and more covered calls. If I keep up at this rate, I mean, I'm going to be living off this in less than a decade. This could be my entire yearly income for me to survive as long as I keep building, reinvesting. I try not to sell. I try not to pull money out unless I have to. At some point, I will for a house, things like that. But it's really just allowed me to be able to do a lot. So 1,400 off that. Now, Camping World, I just recently bought my second 100 shares. So when I go here to my history, you'll be able to see 200 shares. Sorry, I think I have 400 now. But these ones, I have not sold any calls off of. I am just holding that. I think the stock's going to go back up here pretty soon. I am going to collect dividends in the meantime because this pays a really good dividend, and then make a little bit off that swing trade. I feel pretty confident about that. So just take that into account when we're looking at these numbers, that really this is not based off these extra 200 shares that I bought when we talk about percentage, everything like that. So first one, I sold 2 for $1.10 each. So we got 220. You can see I've been buying a lot here. I actually don't think that this is my... Okay, yeah, this is the one that is current. Okay, I thought for some reason it was a different date. So I had to buy them pretty far out for September. These, at one point, I'll probably buy out of this, if it's below 50 cents, just so I can do a little bit more trading. But I wanted some cash because I wanted to buy in while the stock was low, and that $220 was good for that. Helped me do some of the buying that I wanted to do while stocks were down. So that's another great opportunity, is it can give you the influx of cash when otherwise you might not have it. You can see here just lowering my cost basis a lot again. So let's see. Another 55 here. Another 105. And I've never had any of these actually execute. I've never had to actually sell any of these shares. I should say that as well too. Other people probably have larger returns than I do, but they do risk their shares being sold. I don't risk that, but you can see these returns are still amazing. Another 35, another 25, another 42. You can see back here, yeah, first shares, starting at 2 shares, getting some dividends, building up, doing all of this. So that's $482 there. So I haven't made as much because the stock hasn't swung the same way that Sunpower has, where they've been this massive uptick, and I've been able to just really take advantage of that. But that's also, most of that so I have 418 shares. 200 haven't traded on at all. The second 200, as you could see when we went through, is fairly new as well, right? So it's about $2,000 for 100 shares right now. I've made $482. Most of that's just been off that first 100 shares. But even if we talk about $4,000, 482 is still 10% of that. And that one is only been 6 months. So I've made 10% on that money in 6 months. So, yeah, the stock's down a little bit, but I can make roughly 20% per year off of this investment. That beats what you're getting in an ETF. That beats all these other types of investing. And even if you play it super safe, say you are getting 8, 9, 10% per year, even if you're adding 2, 3, 4, 5% over the course of a year, that's huge when you look at compound growth over years, decades, and your lifetime. So I would definitely encourage you to look into selling covered calls. It is a great way to make money. This used to be something that was very hard to do. Companies didn't do stock splits as often, things like that. You had to have a lot of money to get into this, and then your broker was doing it, and then they were taking a huge cut of everything. And so the fact that you are able to do this is the best time to be alive financially, because there's never been more power in your hands. Even with all the economic hardship we face, it is amazing what you can do. If you have any questions about it, please let me know down below. Like, subscribe, all of that good stuff. Follow me on X, Fourth Serif, same as here. Until next time, I will see you guys on the trading floor.